Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tigre. My standard joke at this point is to say our victim of the day is so-and-so and introduce the CEO. In this case, we have a bit of an unusual situation in that we have a CEO and a vice president for exploration, and they've already read what I've had to say about this company in my take. And they weren't exactly happy with it. So we've got a bit of pushback here. This will be a more of a two-way, it remains to be seen who's the victim, who gets grilled here, since they already know what I think or what I have thought. And, maybe they can correct me on some things. So I obviously have a bunch of questions, but gentlemen, why don't you, or Antonio, sorry, I should have introduced you. Antonio Canton is the president and CEO of Gold Springs Resource Corp. Randy Moore is the vice president for exploration. So before we get into butting heads over our vicious disagreements, why don't you go ahead and give us the 30,000-foot overview, tell us what Gold Springs is working on briefly, and then we'll get into our questions.
Okay. I make it maybe a little history short introduction. So I was directing the company from 2010. It was South American Silver, Indian Silver big project in Bolivia. We were nationalized in 2012, and I was chair of the merger committee to make the merger with Gold, who owns the project. And then we went to arbitration. We won the arbitration. I went to Bolivia to negotiate with the Morales before the election to get paid, and we were lucky to get paid just before the election. And then now we have only one project. We sold the shares in World Copper. So we have one project, one objective. And I give the word to Randy to explain how our project is on site.
Okay, yeah, Randy? I can give you a brief geologic setting and a little bit of history out there. I first became involved with this property when I was the senior U.S. geologist for Cambior. I got my feet on the ground out there. We acquired most of the ground that we currently have. We did the initial work preparing it for drilling, and then back in 2000, things sort of went sideways with the company, and we lost the project. I was able to get it back in 2010 with High Desert Gold, and since then we've been moving it forward slowly. It's not untypical in terms of the Great Basin, where you have your deep-seated extensional structures within the Great Basin, and superimposed on top of that you have caldera complexes. So you have deep feeder structures and also the heat engine from the volcanic activity to circulate your gold-bearing fluids. And in our case, our structural setting, the Great Basin structures, we also had some lateral movement on that, and that lateral movement created breccias and permeable pathways. So we had the ability to create volume and bulk mineable deposits. These epithermal systems, low sulfidation, are seen throughout the world, typically high-grade veins. And that's the case in the history of the districts that we have. We've consolidated 3 mining districts out here. We have a huge property position of 8,000 hectares. And historically, there were a number of mines, underground mines, typically in the half-ounce range in terms of production. There were several mills on site. Production lasted until 1942, when the L204 closed all the mining operations. So we came in 2010, started drilling programs, and we've advanced this slowly, raising money each year and progressing. We now have close to, if we look at gold equivalent, we've got 1 million ounces, but in terms of gold, about 850,000 ounces, about 12.5 million ounces of silver. So it's beginning to really take shape as a significant discovery. Our resources divided up into several different pods. We now have 6 separate mineralized zones, resources. All of these are open to expansion. Last year, we had a few new discoveries. Those turned into resource categories. We just did the resource update recently and added those in. So we're moving this forward. We're pretty happy with our progress. We have a pretty aggressive program this year, 21,000 meters of drilling. We're not quite halfway through that. We've got 3 drills on site, 2 RC, 1 core. So we're starting to get a good flow of information, assay results coming in. We just released some new ones, but that's where we sit right now.
Okay. All right. A couple points of clarification here. So this is structural. When you say extensional, you know, things move apart, things open up, create those pathways. You said sideways movement, lateral movement that creates dilation zones and so on.
Absolutely. Yeah.
So we're not talking lower plate Carlin style. This is completely structural. Is that right?
Yeah. Volcanic hosted structural control. Absolutely.
Okay. All right. Well, in Nevada, it's important to specify because everybody gets all excited about, oh, Carlin style mineralization. All right. So then conceptually here, this is sort of like Detour or Canadian Malartic. There's these old high grade mines. And the thought is, what's the gold endowment around it? What's the bulk tonnage around it? Is that, I mean, why not go back into the high grade half ounce that got stopped by the War Act in 1942?
I look at it as take the low hanging fruit first. Typically progressions of mining districts, you try and exploit the easiest to mine. We have a situation where we can have bulk mineable, open pit, simple heap leach technology and move this thing forward. The vein systems are there. We've hit it in our drilling to really dive into those higher grade zones. It's going to take a completely different style of exploration. Those things need very close space drilling. So it's more expensive. We're going to capture most of that material within our pits anyway. So our focus is to add ounces and really develop a larger resource.
Okay. So this really now gets into the guts of my questions here. And there's a slide in your PowerPoint presentation. I don't know if I can, maybe I can paste one under the interview when we publish this, but it shows your resource areas and it shows these red ovals on the topo there that you've got with all your different targets. And okay, so you've got 1 million ounces of gold or gold equivalent there. It's not one deposit, it's multiple zones. And, 3 of them look like they're stuck in little valleys there. You have the presentation says the strip ratio is only 1.6 to 1. And, if you had one big sort of roughly pit-shaped deposit or whatever, at surface deposit, that might make sense to me. And I'm not saying you're lying. I'm just saying, help me understand how this can be. I'm looking at, all these separate zones. I'm looking at, the north jumbo area seems to be subvertical. The south area seems to be kind of flat, but on the north end, kind of buried by a hill. And you've got mountains on the sides of these things. How can you have such a low strip ratio? Help me understand this.
Well, I think the perception that these things are stuck in narrow valleys, that isn't correct. They're actually positive relief, positive topography. All of our ore bodies are outcropping, and they sit on ridges. They're typically silicified zones, so they're erosion resistant. That creates the positive topography. The confining structures are the structures on the margins that create the ability for these deposits to develop. Those are again negative. Those are the valleys. So our ridges are in between. Easy to see that this thing will have a low strip ratio.
Wow. So I'm just looking at it wrong. I mean, it just maybe a plan view would have done you guys better. I mean, really, I look at the south jumbo and right on the sort of lower right-hand corner of the image, it looks like there's a mountain right next to it. It looks like there's a ridge on the other side. But I guess what you're saying, I guess there's a pit in there, and that pit has taken out the ridge that would have been there. Is that what you're saying?
Yeah, the resource sits on top of a ridge, or it is positive topography. The valley is quite wide in there, so there aren't big mountains right next to it. We're really in a positive mining situation. We are even looking right now at mine design, and next to that South Jumbo resource, we're looking at putting processing facilities. The valley is so wide in there, so it's for whatever reason, it's not coming across in terms of the setting out there.
Yeah, I guess. Well, there's also, not to beat this to death, but the Thor resource area, it looks to be, it's right on the Nevada side of the border, and it looks to be, right on the shoulder of a big hill there. Is that?
It's not, well, again, it's not a big hill. The Thor is mainly a vein system, so that would be mined by a slot cut. We have not followed it down dip yet. And as you were talking earlier about chasing some of these vein systems, looking at potential underground higher grade, the Thor presents that opportunity. In fact, we drilled one deeper hole out there, which we have followed up, and that hole intersected, I think it was around over 6 meters of plus 40 grams of gold. So that's sitting out there waiting for some additional exploration.
All righty. Well, one more thing on this then. There are not a lot of sections that I could find on your website to help me see the model and get it in my head, but I did find one, and it shows the South Jumbo, which looks kind of flat lying and near surface, mostly to the south, but then it shows a sort of hill ramping up towards Jumbo. And I mean, all right. We won't beat that to death.
You need to come on site to see it.
Yeah, well,
because honestly, it's not mountains. When you go on site with the cars and driving around, it's really not a big issue. This mountain. It's really
okay. All right. So the topography looks misleading. Maybe just a map view would serve you guys better in the future. But it really looked like it was stuck in like the crown of your molars, like between these little ridges. Okay, so that does help me. That does help me. And the other big question I had, or not, big pushback really, was I said that the 2020 PEA, and by the way, I did congratulate you for having very conservative numbers. I recognize that 1450 gold and 16 silver, people are using like spot now, which, drives me crazy. So you still have in your PEA, this is a 2020 PEA with 38.9% internal rate of return, which is excellent. It's really robust. Even with inflation, presumably that's still positive, especially with such low gold price assumptions. But we have been seeing major blowouts in CapEx. I mean, and not just from fly-by-night juniors, but, big miners, the biggest in the business, are seeing huge CapEx and OpEx overruns. Our friends in Canada just had a 90% at the Côté project CapEx blowout. More similarly to you, the poor guys over at Integra had a similarly very robust PEA with a similar grade, plus or minus half a gram. And then they go to the PFS level, and suddenly all this engineering crops up and a bigger plant and a bigger expense, and the IRR goes down, and the market hated it. So one of my points was that, it's 2 years old, costs are up, it's just a PEA. Let's see what more advanced engineering study has to say here. Sorry, I'm talking too long here, but this is a great story. One of my interns took your site. He's like, Lobo, if you wait for a feasibility study on this, it'll be taken over. It won't be there anymore. The value, the price will already be way up. You'll have missed it.
Yeah, I agree.
Yeah, of course you do. But you can't kiss all the girls. And if you bought Integra before their PFS came out, you're in a world of hurt now. So why is this different? How can this be any better? How seriously can we take these PEA numbers? How can we avoid disappointment here as we get to know this better in a higher cost environment? Go.
So maybe I can answer to explain why I became the CEO and the biggest shareholder in the company. So when you go on site with geologists and you see the history of the different targets, you see the potential. Honestly, internally, when we talk about the possible resource, in 2019, when we're discussing, we were looking for 3 million ounces to become a target for the major mining company who look at us and might be interesting to buy a resource in the ground, even with the PSF. So, but now when you look, Charlie Ross, for example, 20 holes, 100K M&A resources. We have a big different target where we can have between 500,000 to 1 million ounces, like Charlie Ross, Midnight. And if you come on Sinai and see all these different targets, I mean, we're targeting more about 5+ million ounces. And there with the PA, I think when you think it's bigger than even the cutoff, you can get higher grade and we can go deeper. So for me, it's not a problem.
Actually, let me jump in on that, because that higher grade cutoff, I don't remember seeing that in your materials. Whereas somebody like another comparable might be Liberty, right? They have a couple million ounces, roughly similar grade, around 0.5 gram, a little bit less. But within that, there's 1 million ounces at over a gram per ton, which is, you know, an oxide heap leachable again. So that's, and they're also in the doghouse, by the way, share price wise. These comparables are interesting. Is there, in the existing resource, is there a higher grade starter pit, or is there a subset at a higher cutoff that has a consistently mineable higher grade?
There is, especially at South Jumbo, we have these zones where we have some lower angle structures that are intersecting the higher angle structures, and these create these cigar-shaped zones, horizontal, that are stacked in there. Right now, we think we've got 3 identified and possibly a 4th, and these are multi-gram zones, roughly 400 meters long, maybe 30, 40 meters in diameter. So very shallow, the first one, 20 meters down. So we do have that opportunity. We haven't looked at, when we did our last resource update, the highest cutoff we used was 0.3 and our grade jumps to about 0.6. So, we can look at those different cutoff grades and start identifying higher grade portions of these systems, but we do have them really within all the deposits. There's some higher grade portions, but South Jumbo lends itself to it because it's so shallow. We grab it right at the starter pit.
Thanks for that clarification. But to get back to Antonio's answer, I guess what it sounds like what I'm hearing here is actually, never mind the PEA, it's going to be a completely different project when we're done drilling it, and it's going to be much larger with different economics. Is that what you're saying?
Yeah, for example, we want to do a PEA with at the end of the drilling 2022. So our objective is to grow the resource and do all the what is needed for the PSF with the core drilling that we're doing this year, etc. We know we're going to grow the resource, and each PEA might have some changes, as you know, as a project advance. So we're not so much concerned with the result of the PEA, especially as you know, when we have a resource update, we cannot talk about the last PEA, so we cannot discuss about the 2020 PEA, and we are more concerned about advancing the project, doing the resource update end of the year with a new PEA and advancing for there, because we know on site, I will say, like Homestake can be a new resource. We all this new drilling we're doing in 2022 can become a new resource. We have 2 RC drill, one to expand our existing resource and one to make new discovery and to add resource. So I think what it's clear with our company is we have one objective. We want to go to 3 million ounces with the mining permit in hand, which when you discuss with major company who are already interested about our project, this is new for them. Normally, this exploration company, they do the resource, they advance the resource, but they don't care about the permit. And here we want to advance both in parallel to help this major company to make us a very good offer for the benefit of all our shareholders to buy the project. And after 12 years in mining and in Canada and things, I don't see a lot of company with such a clear vision, you know. We want to have one big dilution to get to this exit, which is this financial instrument, 25%. It's clear, shareholders knows about it. And when you read all these other company, you know, they have funding. You don't know how many dilution you're going to get at the end of a good project. And then maybe you're going to have a GV and maybe a streaming agreement or royalties agreement, etc. Here we clear, no GV, no streaming, no royalties, one objective. And I think it's good for shareholder to know where we're going. You know, we're going to these 3 million ounces. I will say myself as a bigger shareholder, I go to 5 million ounces, you know, and here we are, you know, it's very clear. So this PEA, it's a very good first document. As we know, we're going to have a next one. I think it will be done for 2023. And then we continue to advance this project. It's always the same goal. Low cost administration expense, you know, we have 3 guys in the payroll, you know, half of the administration expense is CFO, auditors, and lawyers, which as a listed company, we are obliged to do. So 700,000 administrative expenses, I think it's super low. You know, it's as a CEO, I've got half of the thing. Everything goes into exploration. No flight, not a lot of IR and conference, etc. So for a shareholder, he knows where the money is going. You know, 95% of the finance go to exploration to bring value to the project. I know it's a listed company and we depend about the market and brokers and things, but for a shareholder, I think it's important to see this clear vision at middle term where we're going, you know, and we trying to.
I hear your passion there, Antonio. I hear your passion. I got to push back a little though, because it seems like, you know, every junior wants to get taken over and they don't all just ignore the permitting. I mean, look at, for example, Marathon right now. They've already got 5 million ounces and they're advancing the permitting, and it seems to me the more common approach is to say, you know, we'll accept a takeover offer, but we're going to build this. And by presenting it as like, we're going to build this and we have the capability and we're going to de-risk it, that's what attracts the takeover offer. And even so, there's companies like that, they've got more than twice the grade you have and 5 million ounces, and they still haven't been taken over. So I'm not saying it doesn't happen. Obviously it does. Takeovers happen. But how can you guarantee that outcome to shareholders, or, you know, that, or setting that as the goal, setting the takeover as the goal seems risky to me. You got to be willing to take it all the way if there is no takeover, and then you come back to the dilution question.
Yeah, but not at the same level than today. You understand? If you have 3 million ounces as resource and a PSF, the value in the stock obviously should be higher than that. But,
that I would agree with.
I don't fully agree with you because we're de-risking the project. You know, we have good infrastructure, we have water, power, roads, railway, no cultural, no environment. We have the kickoff meeting with Utah states for the mining permitting. I don't know the other company, what is the problem with 5 million ounces and why a major will not buy them. We are in US, Nevada. So depending where is this project, what can be the problem with, as you know, nature, environment, locals, etc. in different countries. Here it's very clear. And honestly, when we go to PDAC, we have already major company coming to be interesting by us. You know, it's not an invention from Antonio Canton. You know, people are talking to us, and you can ask Randy. He had a lot of company going on site for underground mining, for GV. We have billionaires in Canada who wants to buy us for very cheap, as you know. But we are focused to protect the shareholders. We don't want to make stupid deals, but we want to advance it. Obviously,
okay.
A big
let's talk about that. Let's talk about that. So, you've already got 250,000 shares issued and outstanding, and given the history in Bolivia and, you know, the torturous path to get to where we are, that makes sense. We understand, and we understand wanting to keep dilution down. You know, absolutely no question that is a good thing. And another bone of contention, though, is and given what you're saying about people interested in buying you while you're cheap and you are on sale, so I can see that potential for not a takeover, but a take under here while the market is down, and why you would resist that. But one of our offline disagreements was you have a sort of poison pill prevention program with a new financing, a special rights offering that it's not standard. This isn't how poison pills are normally done. And it gives the participants who buy into this the clawback right on a 5x basis, including yourself, and anybody who steps up to the plate with $1 million to buy into this thing.
Maybe I make a little correction. It's not 1 million. You know, we did million, but somebody can come with 100,000, 50,000. It's open to all shareholders. It's not something special for management, you know, or directors or big shareholder. Everybody is open. It's been, you know, published, and we're talking to funds, to private people. We have some other investor coming in the coming weeks, etc. So it's open to everybody. You know? It's not something.
Okay, that does help. I mean, one
for the poison pill, when I discuss with big company, you know, they really understand it. You know, if they have to pay 5 times to an investor, plus buying the thing, plus developing, it makes them think, you know. And all the big company with whom I discuss, they found it very clever, I have to say.
Well, it makes me nervous because, you know, you get 5 times back the money you put in if the deal doesn't fail. Now, if every other investor can participate, I guess if there's 100,000 minimum, you know, if a lot of other investors can get that same deal, there's not a minimum.
No, they can send me an email. I organize the
okay, well, okay, great. Well, that helps a lot. I mean, that right there helps a lot. And the impression we got from the $2 million tranches, and my mistake if I leapt to a conclusion, was that this would be a handful of insiders who would then get 5 times their money back if they didn't like the deal, and therefore could even have an incentive to scuttle a deal. There could be a deal that might be okay for other shareholders. But they might make more money if they trigger the clawback and get 5 times their investment back that way. So it helps me a lot to know that everybody can participate. But
let me just explain why I invest, you know, because you discuss with a lot of CEO and you know that, you know, many times they invest little money in the company and they get big salaries, okay, and incentive and options, etc. Me, I bought all the share I have, you know. It was not an option, etc. I put more than 5 million. I had this idea of this financial instrument, and I put 2 million to show, you know, it's not, I'm not asking you to make a big deal, a good deal, and I don't put my money. I put myself the money, you know. So I think this is important to know. I didn't put the money just to try to have an advantage on other shareholders, etc. I wanted to show to other investors that this is real. I really believe in the project. I really believe that this financial instrument can bring us to this level without different dilution and fighting for private placement, brokers warrant, all the things, you know, on exploration. So this was the reason, just to clearly explain why I put the money. And if needed, I will put more money. You know, it's I'm buying shares. I bought more than 5 million shares since I became the CEO. And this is in Cedar.
Well, I hear you, and I absolutely appreciate skin in the game. It's actually one of the things that I look for. It's on my checklist. If I want to invest, I want to see skin in the game. You know, if you won't put your money in, why should I put my money in? So I get that, Antonio. No disagreement with that at all. But it's just this
more. It's many. There is, I think, 4 or 5 big groups of shareholders. They are here from the beginning. They believe in the projects in the beginning. That's why on the hostile takeover, honestly, I'm not really afraid, because I think all these groups, they are in from the beginning and they like this project. They want to continue to make the project advancing, etc. So this is not changes of shareholders, group buying by other group, etc. They are here from the beginning and they want to go with the same exit that the management want and for the benefit of the shareholders.
Okay, but in my mind, the issues are separate. The investment opportunity and the payback, if all goes well, to incent people to come on board with you and put, their money in as you have. I get that. I have no problem with that. It's specifically the 5 times clawback if a deal doesn't go through that sticks in my craw. Nobody else does that. Why do these things have to be mixed together? Why not do a normal poison pill that way? Do a debenture, or raise the money from the people who believe in the project as you do now, fund it through to your goal. Why do these things have to be mixed together? And there are reasons why there are standard best practices in the business, and this isn't one that I've seen before. So help me understand this.
It's a new way, Let me explain to you. I'm a CPA, I'm a financial guy. If I would advise a geologist at the beginning of a project, I will tell him, stay private, and when you have the resource and the thing, let's do a big IPO, because at the end of the day, if you're a big shareholder in a company, it's difficult to go out, as because the market is not so liquid, etc. So with this financial instrument, we try to bring investor in the same thing, because we've seen in the past of exploration company groups coming into a funding. After 1-2 years, they get bored, they sell the shares, they put the price down, and then you need again to go with a broker, negotiate, etc. So here, the investor, they have to stay until the end. They have the same vision than the shareholder with this exit thing. And this is, I think, really good for the company, because then
Okay, I get it. What you just said
about advancing the project and not talking to brokers every day. You know what I mean? We want to advance the project.
All right. Okay. That helped me a lot, Antonio. I understand what you just said. I see the difference there. I'm not a lawyer and I'm not a CPA, so I can't read, my eyes will cross if I try to read through all the agreement fine print there to back up what you've said. But conceptually, I understand now what you have said. It'll be an interesting experiment. If it works out, then I'll, it will be interesting to see if other people don't follow in your footprints. Okay, I get that. Let me rewind then to something else. We talked about de-risking the project. Hopefully we get that takeover. The other one I gave you by way of example is in Newfoundland, which is all the rage, and they have most of their environmental permits not quite finalized. So we're not talking about Bolivia here. It's just interesting. We've been expecting lots of M&A to heat up as the COVID lockdowns go away, and it seems pretty slow, but at some point it has to happen. For your project though, you've got 2 states. Doesn't that complicate your permitting? And is the land BLM land or Forest Service land, or what is the risk profile for permitting where you are?
I can address that. We are advancing down the permitting right now. We're meeting with the state and federal agencies. We are on BLM land. We also have some state of Utah Sitla land, several sections of that. And we have a few parcels of private land, old patented claims. So it's a mix in there. The permitting actually, initially, it helped to be in 2 states. When we start with a notice of intent and the beginning of the project, you're allowed so much disturbance, and being able to work with 2 agencies that increased our ability to build roads and pads and expand without going to a notice of, or a plan of operations. We now have a plan of operations. We've done EA, environmental assessment in both Nevada and Utah. We've met with the BLM on both sides of the border, the Nevada side out of Caliente and the Utah side out of Cedar City. We've sat down as a group. We've talked about how we move this forward, and basically Utah will be the lead. So we'll deal with one BLM office, develop the project that way, and then the Nevada side will weigh in as we move this down the road. So we're not permitting on both sides. We're really just permitting one operation through the Cedar City office. Utah's a little bit.
That's really interesting. I hadn't thought about that, but You get your 5 acres of disturbance. If you get that twice, 10 acres.
Yeah. So it worked to our advantage early on. In Utah, it's interesting that the state is very much involved, even in permitting on the BLM land. The state acts as a lead agency. So we had our kickoff meeting with the state, the BLM. We're starting to move that forward as we, you mentioned in terms of de-risking the project. That's early on. I look at coming into a project, you start to have success. And as a geologist, you want to look for fatal flaws. What's going to derail this thing? And if you see something, can we find a way around it or solve the problems early on? And so we looked at that. Again, we did EA on both sides of the border. There's no issues in terms of plants, animals, sensitive species. The only thing that really jumped out was water. And so early on, we applied for and got 900 acre feet of water. We also purchased another 65 acre feet of water. So we have enough to run an operation that could produce a couple 100,000 ounces a year. So we solved that problem. And part of that de-risking and part of the transparency is moving this thing forward through the permitting process, which we think we can do a number of different ways. And we're meeting with the state early next month to start navigating this process. If we build facilities on private land, it becomes easier. If we build facilities on Utah state land, we don't have to go through the NEPA process. And then building facilities on BLM land. So we have quite a bit of flexibility in how we navigate this. And we want to do it so it's easy as possible, but not negatively impact the project, obviously, in terms of economics. So it's going to be a fun process, actually, to go through to see how all the pieces fall together. I know it's hard to say.
Your idea of fun is
process.
a little different from mine, Randy. Meeting with bureaucrats is not on my fun list. Okay, I hear you. Another Antonio question, if you don't mind me veering suddenly here. This isn't just you, okay? I'm not picking on you. The market is down. A lot of juniors have seen their share prices retreat with gold and sentiment, and more alarmingly, volume. But in your case, it's the volume has really dried up, and you're not that far above penny stock hell, and you're a .to, not a .v. Are there listing requirements? Do you have to maintain a certain share price level to maintain that main board TSX listing, or do a rollback to increase the share price, or how does that get managed, Antonio?
To be honest, I don't have the answer.
I appreciate an honest answer.
I will need to consult the Canadian lawyers.
Okay.
But we've been down much more before, I will say. We went to 5 cents. So I don't think there will be any things. Honestly, what we're missing is bias because the market is quite illiquid these days. And I've been buying, and I will continue to be buying, and some shareholders continue to be buying. But we need the story to be out, honestly. And for us, when I became CEO, I tried to make things, to have a clear objective, to put the finance in order, to explain the history and our message. And now we need to have a new bias. And what I'm telling to investors interested into the finance instrument, it's to do both ways, build the position and go into the financial instrument. Because obviously, if we drill, we have money, the share should go up commonly. But we need to put more effort in IR, I will say, in US, we just asked for the DCT fast license, which we didn't have for OCT. So it means many banks in US couldn't trade our stock. We're working with ITG, market makers. So this is one of my concerns, I will admit, for the second part of the year to make the story out in US especially, and in some places in Europe and Canada. But yeah, to augment the volume and the story out. So we need people to talk about us, Leo. We need analysts. We need
hence your willingness to step in the pit with me. And by the way, dear audience, this is not paid IR. They haven't paid me anything. I don't take money for doing these interviews. I just interview companies that my clients are interested in or readers ask about. And this is one of them. It's just an unusual one because this one has been covered in the My Take service. And so, we came to the table with very different mindset from the typical person. I'm actually surprised I haven't been sued yet because, I cover hundreds of companies and I can't give them all thumbs up. It's not that they're all bad, but, there'd be no discrimination if I said, yay, all the companies. Anyway, I hear you. And it's good to know you've been under 5 cents before and been able to go high again and not have trouble with the TSX. But just to make sure we got a clear answer, you're not thinking about any share rollbacks. You're not going to roll up current shareholders in a consolidation?
It's an idea we had before we discussed, and I need to see with ITG and what happened in US with this new OTC DC fast, how we can put the market up or on the volume, I will say, not on the share. And then we will take a decision, which is maybe a rollback.
Okay. And on the financing, I don't want to ask for anything that's not public here, but there were 2 million out of 20 million raised as far as what we saw.
It's 3 million.
Is that enough, or have we raised more? Can you say about how much money to put into the ground this year?
So I think we have a budget of 5.5. That was we have 2 new investors coming in with 2 times 1 million. My objective is to close the first tranche quickly, to be able to go to the second objective, which is 2 million. This is 2 million ounces. So this is my goal for this year. It's to close the tranche and be ready for next year for a new big drilling campaign with new discovery and trying what we've been doing, with core drilling, 2 RC on the side. And
yeah, I understand the deliverables. I understand what you're going for. I'm just asking, Randy, do you have the money to keep going, or are you waiting for him to get his butt in gear here and get you the money?
Right now we're going full steam, and we'll see what happens on the financing.
All right. Okay. Well, that was really I had those very specific questions. I usually wrap up these interviews asking the skin in the game question, but you've been abundantly clear with that, Antonio. And I salute you for that. It means a lot to me and all shareholders potentially when the CEO and management are willing to put, some significant skin in the game and not at, penny founder shares or something like that. So we appreciate that. I understand where you're going. I understand that Randy's drilling, so we've got more results on the way. We'll see if Mother Nature cooperates with you guys on your targets, and we'll see if the price of gold cooperates with the markets and so on. Those are my questions. You have addressed them well. I'll give you guys, since you've been good enough to put up with these obnoxious questions of mine, the last word. Is there anything that you want to make sure you leave our audience with?
Yeah, I think I just put out a newsletter today, just to give a little of the history of Gold Spring, which is, I think it's amazing, and if people want to visit the properties, they are most welcome, because it's a nice tour, first of all, and it's you can see all the historical work, the village was built, Gold Spring, the mills, we cannot go obviously in the tunnel. But yeah, it's a great project, it's a large 33 targets, 28 historical mining workings there with high grade. And I think the way Randy is handling it, it's very good, because he has always, like, 1 year in advance, with the permitting, the road, the pads. So we are always thinking about the future drilling things. And with all, when you see the result in Homestake, Charlie Ross, I think we're going to have very good result this year and new discovery. So yeah, people should watch Gold Spring this year.
Okay, well, thank you very much. Randy, go find us some more gold.
I will.
All right.
It's a fun project to work with, lots of targets and new discoveries last year, and we hope to have new ones this year. So
I will. That was a forward-looking statement. Okay. All right. Thank you, gentlemen. Have a good day. And audience, until next time.
Yeah, appreciate
thank
Lobo.
you.
Thank you.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.